What's up, traders? So today I'm going to show you the best way to start buying leaps to ensure your highest probability of profit now that the stock market is going up again. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. But before we begin, if you could pretty please smash that like button, it helps the YouTube algorithm. And please do subscribe to the channel because we have some amazing videos coming up here shortly. And do remember that I am not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I built wealth over time. Now, unless you've been living under a rock, you know that the market is up huge today. And the reason for that is US and China agree to slash reciprocal tariffs in major step toward easing trade war. So over the weekend, both companies had a meeting in Switzerland and they agreed to a 90-day pause in the tariffs. And during that 90-day pause, the combined US tariffs rate on Chinese imports will be cut to 30% from the 145% that it was previously, while China's levies on US imports will be cut to 10% from 125%, the two countries said in a joint statement. Now, it's no surprise to me at all that the stock market has gone up over the last 3 weeks because that was right around the time that the current administration started giving hints that they would ease on tariffs. And the big crash that we had during the month of March and the beginning of April was all 100% due to tariffs. Because as we've seen from earnings, our US companies are doing great and are continuously increasing their earnings quarter after quarter. But what this tariff chaos did do was set us up for a perfect opportunity. And if you are part of the Trade to Freedom community, then 3 weeks ago, you got the notification to start buying leaps. So we can see here in the community 3 weeks ago, I posted, "It's time for leaps / poor man cover calls. Our technical indicators are looking good. And even more important, the economy is strong." Both the CEO of Amazon and Walmart spoke within the last week, and they both talked about the strength they see within the consumer. When you have a strong consumer, you have strong companies. When you have strong companies, you have a strong economy. In a few minutes, I will place a poor man's cover call on ticker symbol VTI, which is an ETF that follows the entire US market, which is over 3,000 plus companies. Now, this is nearly a 2-year trade, so will it be up next week? I couldn't tell you. But over the course of the next 2 years, we could see amazing capital appreciation from this trade while possibly collecting premium every single month. All right, but again, this was posted 3 weeks ago, so we are up amazingly on that trade and several others. And me personally, I am an option seller at heart because I like the consistent, reliable income every single month. And so when I say it's time to start buying, it's usually time to start buying, because I typically only do buying strategies when the opportunity presents itself. So I'm going to show you the data points that I look at prior to doing any buying strategy, especially leaps. But if you would like to join the Trade to Freedom community and get all of my notifications, not only will you get to see my trades as soon as I enter them, but you'll also get my entire options framework via the Trade to Freedom course. You thoroughly will have access to ask me questions at any given time. And lastly, you'll be within a community of other traders who all have the exact same goals as you. And we have option strategies all the way from 0 DTE for our day traders, all the way up to monthly income strategies for our individuals who are a little bit more busy. So if you know anybody who can benefit from that, please tell them about the Trade to Freedom community. The link is in the description below. But let's go ahead and dive a little deeper. And real quick, for my people who are new to options, you would buy a long call or a leap when you believe that a stock price is going up. And as the stock price goes up, you profit from the rise of the stock price. And the reason that leaps are attractive is because you get the power of buying 100 shares. However, it only costs you a fraction of the price. All right, so assuming that we were going to buy calls at the strike of $100, well, if you were to buy 100 shares of that company at $100, it would cost you $10,000. However, if we're just buying the call at a $100 strike price, it may only cost us $2,000. And so it costs way less than buying 100 shares of the company. But the downfall is option contracts all have expiration dates. So unlike shares, which you can keep forever, your options contract will expire at some time. But I'm going to show you a way to alleviate that pain point. And so here's a quick example. Say we have ABC stock, and what we want to do is buy a call at the $50 strike price. And for doing so, we would pay $1,000. Well, that's a huge savings because if we were to buy 100 shares of the company at $50, that would cost us $5,000. However, for this call, we're only paying $1,000. And so now that we've paid $1,000, the $1,000 mark is our max loss. We cannot lose any more than $1,000 on this trade. However, we have unlimited profit potential because as the stock price rises, we will make more and more money. But in general, leaps are an amazing way to build your wealth. And over the weekend, I was driving to my 4-year-old's preschool graduation. And while we were in the car, my 15-year-old asked me, he said, "Hey, Dad, do you consider yourself to be wealthy?" And that question struck me off guard because over the years, I've answered so many different questions about wealth. I've never had someone just come up and straight ask me, "Do you consider yourself to be wealthy?" And when he asked me that, I had to sit back and think for a minute. because while I know I'm blessed and highly favored, I had to think of what my definitions of wealth were. And to make a long story short, I have two different definitions of wealth. I had my own personal definition of wealth, but then on the other end, I have a definition that God gave me. And so my personal definition was wealth is the ability to do what you want, when you want, with who you want, for how long you want. All right. And by that definition, I sat back and I said, well, yes, by that definition, I would consider myself wealthy because I can do whatever I want, when I want, with who I want, for how long I want. So I told him by that definition, I guess, yes, I would consider myself wealthy. However, the definition for wealth that God gave me recently was wealth is the ability to bless anyone at any time with anything. And for me, I had to underline the word anything. And by that definition, I told him, no, I'm not wealthy at all. But what I believe will happen sometime in the future is God will give me the ability to build houses and to just walk out into the street and hand the keys to a homeless family. And I believe that he will give me the opportunity to do that because he knows that I will steward it in the right way. And so when I'm able to bless anybody at any time with anything, that is when I'll be able to consider myself as wealthy. But I believe over the years, as I continue to compound within the stock market, that type of wealth where I could just buy people houses and not think twice about it will occur in the near-term future. And LEAPS will be one of the tools that I use. So let's talk more about it. But let's quickly take a look at what stocks we could do this type of trade on. So one of the most for sure bets when buying LEAPS is to use a broad-based ETF such as SPY or QQQ. Now, SPY follows the S&P 500, which is the top 500 largest US companies. And then QQQ follows the NASDAQ 100, which has many of the same companies within it. However, it's only 100 companies and it is more so focused on technology. But looking at SPY, we can see that it is up 3% today and currently at $582. And looking at the companies within this ETF, we have all the big names like Microsoft, Apple, Nvidia, Amazon, Meta, Broadcom, Berkshire, Google, Tesla, Google again, JP Morgan, Visa, Eli Lilly, Netflix, etc., etc. But the larger the market cap of the company, the bigger percentage of a holding that they are within this ETF. Now, looking at the chart, we can see that we peaked on February 19th at a high of $613. And then because of all of the tariff news and the constant headlines, we continuously sold over the next few months. And then we reached a low of $481. And then very shortly after that, the president started announcing tariff pauses. And from there, we traded in this little range here. But now since April 21st, we've been essentially going straight up. Now, what I want you to do is pay attention to this blue line here. So this blue line is the 200-day moving average, and that is typically one of the strongest points of support or resistance. And we can see that we are well over it now. And I'm currently recording this video with about an hour and a half left in the market. So unless something super crazy happens and we start tanking, it should close above the 200-day moving average. And then if that happens, that could be a great line of support. All right, but we are currently looking at the daily candlesticks, and whenever I enter into a LEAPS contract, I always look at the weekly candlesticks. So let's switch over to the weekly, and then I'm going to show you the data points that I like to look at. So now we are in the weekly candlesticks, and the first thing I want to look at is the stochastic. So the stochastic are these lines down here, but the stochastic just aims to show you in which direction is momentum taking a stock. All right, so obviously the stochastic is pointing in an upward direction, so the stock currently has upward momentum. And that is the first thing I want to look at when buying a LEAPS or any call contract is the stochastic pointing in an upward direction? Now, preferably, you want to catch it after it's come out of this oversold area here, which is exactly what we did in the Trade to Freedom community. All right, and so we started buying LEAPS during this week here, and ever since it's pretty much just gone in an upward direction. But you just want to make sure that the stochastic is pointing upwards because it can come up and stay in this overbought area for a very long time. So if we take a look back here in January, we can see that the stochastic stayed in that overbought area for quite some time, and the stock just continued to go in an upward direction. So that is the first thing I want to look at. And then the second thing I want to look at are the Bollinger Bands. So the Bollinger Bands are these black lines up here, but they just aim to show you the range that a stock price is expected to trade within. Okay, and preferably I like for the stock price to be somewhere in the lower Bollinger Band. However, the stock price is just slightly above it currently, but you can see we still have some room to go. But the Bollinger Band is accurate about 95% of the time. So we can see going all the way back here, you can see it pretty much trades within the Bollinger Band, and it may pop out for a little bit, but it always comes right back in. Okay, traded within, popped out for a little bit, came back in, popped out, came back in, popped out to the downside, then came back in, and that pattern just continues on. But now that we've looked at both the stochastic and the Bollinger Band, let's head on over to Thinkorswim. But before we do that, if you like this software that I'm using, this is Barchart.com. and I pretty much use it every single day that the market is open. But besides just looking at charts like this here, it also has one of the most advanced screeners that I've ever used, and I use it every single day to find the best trades. And on top of screeners, it has a ton of other data as well. But if you want to give it a shot for absolutely free, use my link below in the description. You will get the first 30 days for free. So nothing really to lose when you're using it for free. So go ahead and give it a shot. But let's head on over to Thinkorswim. All right, so now we're over here in Thinkorswim, and I've pulled up the options chain for SPY. Now, if you're buying LEAPS, by definition, it's any long call contract that is more than 365 days out. However, for me personally, since I like to treat it just as if I own the stock, I go to the furthest expiration date out. And the further you go out for the date, the more expensive the contract will be. However, it's still way cheaper than if you were to just buy the shares. And so if you did want a cheaper contract, then maybe you can go to this June 18th, 2026 date, which is just 402 days out. However, I'm going to go down to the December 17th, 2027 date, which is 949 days out. All right, and so now that we have our date selected, I like to look at the delta. So the delta by definition is how much the options premium will move per a $1 move in the underlying stock's price. And so for example, at this delta of 0.65, which is at the strike of $560, that is saying that for every $1 move in SPY, this contract's price will move about 65 cents. However, most successful traders that I know use the delta as the probability of the event occurring. So for me, I would look at this and say, okay, there's about a 65% chance that SPY stock price stays above $560 by this expiration date. And for me personally, I like to select deltas of about 0.70. And so the 0.70 delta would have us at this $530 strike. Now, when buying LEAPS, if you want the highest probability of profit, then you want to select a strike that is already in the money like we are doing here. Now, you could, if you wanted a cheaper contract, go way out of the money and select one of these strikes down here. However, you are decreasing your probability of profit by a large amount. And honestly, people who buy contracts way out of the money are just simply gambling. But that's not what we do. We like to give ourselves the highest probability of profit. All right, so we go back to this strike that is $530 with a delta of 0.70. And we can see at the bid and ask price that they are between $123.84 and $126.40. And of course, that is per share, but every contract is worth 100 shares. So we will be paying 100 times the amount you see. So somewhere in the mid price, we'll be paying about $12,500 for this contract. All right, but hey, if you're like, hey, Rashad, that's way too expensive for my blood, then what you could do is just select an expiration that is not this far out. This expiration date that I selected is almost 3 years out. However, you could use a date like the June 18th, 2026 if you wanted a cheaper contract. All right, but let's go ahead and load up the trade. We can just click on the ask price and it will load up the trade for us. So we can see we are buying. And then for the purposes of this video, we'll just say one contract, but you can do however many contracts you would like. For the expiration date, that is 949 days out from now, at the strike of 525. And if we can see if we put it to the mid price, we'll be paying about $128.50 for this contract. And then if we wanted to go ahead and place a trade, we would just select review. However, let's go down and look at the P&L chart for this trade. All right, so we can see here these green dots are where SPY is currently at about $581. And if you pay attention to that number there at the top left, that is how much the contract will be worth on expiration. And the number right above it is how much the contract will be worth today. So you can see as the stock price slowly goes up, we can see the break-even mark is around $655. And then as the stock price continues to go up even more, we have pretty much unlimited profit potential. And over the course of this next, 2.5 years that we would have this contract, the market could move up quite considerably. And this is a bullish trade. So if we go and we take a look at what would happen if the stock market were to go down, well, it will be the exact same thing that would happen if you just own shares of the company and the stock market went down. You would start to lose money. However, the great thing about options is it gives us leverage. And the amount that we paid for the contract is the max that we could lose on this trade. But you can see as I go lower and lower, you will lose more and more money on this trade. And then it gets maxed out at the price that we paid, which was $12,846. Now, I use SPY as an example. However, this is a great strategy to utilize for any broad-based ETF, as long as the correct data points say that it is a good trade. But ladies and gentlemen, that's how we are using LEAPS within the Trader Freedom community. If you would like to join, the link is below in the description. Come and join a thriving community and learn how to generate income and profit from the cash that you already have. And I'll see you guys in the community. But until the next video, peace!